What is up, guys? Shaka here, aka Chase That Coin. Big shout out to Bitcoin Zay and King for inviting me onto their platform. Today, I want to talk about 3 ways that you can possibly make profit while the market is uncertain. You know, it's going down right now. And also, I want to talk about the importance of looking at the BTC chart when deciding if the altcoin that you're invested in or trading is going to continue to grow in Satoshi value or possibly pull back. Okay, now the first way that I want to talk about possibly making some income, well, not income, but making some profit or increasing the amount of coins that you have, even in a bear market, is through proof of stake. All right. Now, for those of you who don't know, quick crash course, there are two different types of, well, two mainly popular proof of stake or proof of work in cryptocurrency. Bitcoin uses proof of work through mining, through ASIC mining machines, and other projects. Some of them use staking, so they use the actual coin to contribute to the network. So one of them you need a mining machine, and another one of them you need the coins. The one we're going to focus on is the proof of stake. All right. So coins like Stratus, a bunch of different other coins, um, some less known ones. Some of them have master nodes. Um, Whatever, right? But the staking process is really cool because you can get some coins. Let's say Stratus, and this may not be the specific mining process for Stratus, but you can look into the different proof of stake. Some of them you need to have your wallet open and just have the coins in there. Some of them you need to delegate your rights to a block producer. So there's different proof of stakes. This isn't just one cookie cutter scenario. So look into your favorite coin, see if it's proof of stake, and see if what kind of proof of stake it is if you want to take advantage of this. All right. So staking, you put the coins in a wallet, and every time you hit a block, you get the block reward. All right. So this is a way, no matter what, especially if you're a hodler, when the market is going down and your coin is going down in value, you won't be so stressed because yes, the coins that you have are going down in value, but you are continuously staking and hitting blocks and receiving those block rewards. All right. So that's one way, proof of stake coins, which is really cool. Some people look at it as passive income, some people don't. That's another argument. The next way is shorting cryptocurrencies. Now, I've been one where I do not advise shorting cryptocurrencies, especially if you're a new trader. If you're a seasoned trader, using leverage can be a great thing. Leverage is basically borrowing against what you have, okay? Or multiplying the force that you have. So let's say you have one Bitcoin. You can put on leverage, 5x leverage, 25x leverage, 3 times leverage to increase the amount of capital you control in the market. All right. So let's say if you were just trading with one Bitcoin, you make your move, you make 100%, you only make 100%. But if you're trading on leverage, you will make more because you'll have more capital. You'll technically have more capital. So you can short the market down, or use leverage to short the market down, or use leverage to ride the market up. Uh, if you're a new trader, I would stay away from this because yes, you can make more profits, but you can also lose a lot more profits much more quickly. Now, the third way it's more of a delayed reaction, and this is dollar cost averaging. Dollar cost averaging is basically I have $100, and let's say I want to buy $2 worth of BTC every day, no matter the price. All right, so I'm gonna buy at a high price and I'm gonna buy at a low price. This is gonna give me an average price somewhere in the middle. All right, so yes, BTC isn't 17,000 right now, but if you dollar cost average it in while the market is fluctuating, it's gonna give you a price somewhere in the middle. And then as BTC, not if, when, and as it rises back to 19K, you'll be in a great position and make some easy profits while everybody else was panicking. All right, the next topic we want to get to, I have to share my screen. Oh, don't have my trading view up for whatever reason. All right, and the next thing is the importance of looking at the BTC chart when you're trying to figure out if your altcoin is going to continue up in in BTC value, or if it's going to break down and lose Satoshi value. All right, now, as you can see, for those of you who don't know, on my channel, I've been calling out for 11,500. This is the only level that's going to excite me for BTC. So I've been calling out for 11,500. It is a key level. As you can see, we've tested it multiple times. Even back here, we tested it as a form of support, and now we're testing it as a form of resistance. All right, so once we break this level, in my opinion, 11,500 to 11,800, that's when we're going to continue up much higher. But as you can see, BTC rejected, all right, and we've been in a downward market for some time now. Alts have been falling, and it's been a bloodbath, right? But on the 18th of March, BTC turned bullish. This once bearish candle picked up some volume and turned bullish, all right? So that's the 18th. But look at the correlation between altcoins and BTC. All right, so multiple people that I knew had big shorts in on NEO. All right, the price was falling, they were making a killing. But on the 18th of March, NEO, just like BTC, turned out to be, gradually became bullish. All right, so it started to reverse. Once you started to see BTC become bullish and reverse, if you were paying attention to the altcoin, to the BTC chart, even though you were in a NEO trade, you would say, okay, BTC is starting to get bullish. I know that at least temporarily, the alts are going to become bullish as well. All right. So that's what happened. The NEO trade started to become bullish. So this would have been a sign to maybe close your short out. But what happened? Right after that, the NEO market started to fall back off. And why is that? The NEO market started to fall back off in correlation with BTC's uncertainty. So yes, BTC did push up starting from the 18th, give us a continuation here. A continuation is when you add multiple candles, all right? So it gave us a continuation here, right? But look, Doji followed by a downward continuation. Even though we did get a beautiful close here, I said this on Twitter. Follow me on Twitter at ChaseThatCoin. This was a beautiful close here. I tweeted this out. So I am still very much so bullish here. But traders, at least really good traders, they like certainty. So we could still break down here and retest back down here before pushing up for BTC. So since there is still that uncertainty, altcoin traders, especially ones that are trading on heavy leverage, aren't going to risk getting liquidated when there's uncertainty. So they're going to close out their shorts and not even put their longs in. It's not even the time to put the long in until we get a little bit more certainty for BTC. I do like BTC here, but it is not 100% certain. I say that the heavier longs, the smarter traders are going to put the heavier longs in around 11,500 for BTC, and they're going to put those longs in and try to ride these alts with leverage. Okay, guys? I appreciate having you all here with me. Shout out to Bitcoin Zay and King once again for having me on their platform. I hope you guys learned something from this, and do your own due diligence and don't just take my word or anyone's word for it, but put in your own footwork and the results will be much better. This is Shaka signing off, aka Chase That Coin, aka Richie. Peace, guys.